The Bank of England this lunchtime opted to keep the base rate of interest on hold at 0.5%, where it's been for almost 5 years. Great news, of course, if you have a mortgage. Not such spectacular news if you are a saver, according to Money Facts. If you put £10,000 in the average instant access savings account 5 years ago, it would have the spending power today of £8,838. A fall of almost 12%. Simon Rose is from Save Our Savers. He joins me now. Money in the bank over the last few years, Simon, has been losing value, hasn't it? And you're not happy about it. It's not fair, but it's necessary. That's the thing, isn't it? Because interest rates, if they were to rise, would tip the entire economy back into recession.
Well, the longer we keep interest rates at this level, the worse it's going to be when rates do rise. And as you say, it has not been fair. It's savage pension funds, it's savage annuities. People are retiring on about half the income they could have expected beforehand. And what's more, it hasn't actually been good for the economy. McKinsey has just worked out that over 5 years, UK households have lost £110 billion more through lost income than they've gained from cheaper mortgages.
But you're not honestly arguing the interest rate should rise.
Of course
now.
I am.
Why?
Of course I am. The natural rate for interest rates is always about 2 to 3% above inflation. When you have interest rates at this level, you get massive malinvestment in the economy. We had recently Ed Miliband saying, well, I want to suppress the price of energy. And everybody said, oh, you don't understand economics. You suppress the price of something, you create a shortage. Well, it's the same for money as it is for anything else. If you'd said to British manufacturers, you know what, we're going to cut the price of every car in this country to a tenfold, well, there'd be a shortage of cars. It's the same thing with money. It has distorted the economy appallingly. And the longer that the Bank of England keep interest rates down, as the pressure cooker builds up in the economy, the worse the interest rate rise is going to be when it does come.
No one on the Monetary Policy Committee shares your view. It should be said.
They're theoretical economists who just don't know how the real world looks.
And who think, they think putting interest rates up would put us back into recession and would be actually quite dangerous. Let's talk about the savings issue, though, because you make a perfectly valid point. But here's the thing. The situation's actually getting better, isn't it? If you go back to September, there were 3 savings accounts in the UK that beat inflation. Today, according to Money Facts, there are 77. The situation's getting better. The Bank of England doesn't need to do anything.
Well, that's assuming, of course, that inflation is going to stay at this level. I'm not so sure that it will. Frankly, the pound's pretty weak. The Bank of England has got inflation wrong almost entirely for the last 5 years. It's one of the reasons we've got this cost of living crisis.
Got quite a lot wrong in the last 5 years, but let's not get into that.
OK, so if inflation stays at this rate, a lot of those accounts actually require you to tie your money up for quite a long time, which people are obviously nervous about if they think rates are going to go up. It's still very, very hard to actually preserve the value of your savings. And in the meantime, savers have lost 5 years of income.
Simon Rose from Save Our Savers, thank you very much for sharing your thoughts with us on that.